Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I've noticed recently there's been a lot of comments about the audio, so I made some changes to my computer, and so hopefully the audio is improving. Please let me know if this sounds better or not. I've also seen the comments where people say that my video is covering up too much of the screen, so I reduced it a little bit in the hopes that it doesn't do that. So right now, the social risk, which is one of the sort of the three main risk metrics that make up sort of the total summary risk that we talk about, right? We have summary risk made up of price risk, on-chain risk, and social risk. And social risk is one of these metrics that I created, that the team created over here at Into the Cryptoverse. We created this back in 2022. And the idea was to just get some insight into whether retail is here or not. There's been a lot of times over the last few years where, you hear people call for certain things, right? You say, they'll call for Bitcoin dominance to go down, or they'll call for alt season, and they'll say this is even crazier than it was in 2021. And there's great narratives, right? There's great narratives, and there's certainly the narratives that get clicks. But when you actually look at the social risk, what you'll notice is that throughout this entire cycle, the social interest in crypto never went above the 0.4 to 0.5 risk band, right? It never actually went above the 0.4 to 0.5 risk band. And you can see that in 2021 and in 2017, we saw social interest go to at least above the 0.8 risk band, right? Somewhere between 0.8 to 1 risk. And that truly was where alt season actually occurred. So I think when we look at a chart like this, we have to ask ourselves, has there been a time this cycle where the conditions, the interest in crypto has been anywhere close to where it was in either 2021 and in 2017? And the answer is no. It certainly feels like it at times that everyone is interested in crypto, especially when you have, the president of the United States tweeting about it, and the discussions about strategic Bitcoin reserves, and the discussions about, the ETFs. But what's interesting is that despite all of that, retail interest never actually came back. Now, there's a lot of, schools of thought as to why retail interest never came back. I tend to defer to sort of the macro environment, the, persistent inflation, the sort of the worry about the labor market. But really, a lot of it, I think, just comes down to monetary policy. We saw very similar outcomes back in 2019 when we had quantitative tightening and relatively high interest rates for the time, where it just was a drag on interest in crypto. And back then, interest didn't even really start returning until after quantitative tightening ended. And I know this is one of those things where it's like, well, how many times are you going to say that, Ben? You've been saying it since 2022, But the reality is that the conditions never actually changed from what we saw back in 2019. And in 2019, essentially what we had was a Bitcoin-only rally where Bitcoin dominance went up and alts bled back to the king. And it wasn't until after quantitative tightening ended, and it wasn't until back then, it wasn't even until QE began, that we even really saw a durable shift in retail interest in the cryptoverse. Now, this cycle, there's obviously been a lot of people that, keep sort of trying to front run everything by saying that, it's this time of the cycle, therefore it has to occur. But the reality is, it's almost like the fact that the markets keep front running it all. It almost just keeps delaying the Fed to make the changes that ultimately they would need to make to bring interest back into the cryptoverse. I've also talked a few times about this cycle. There's been this massive misallocation of capital, and I think it's actually gotten significantly better over the last couple of months. There's just a lot of money in the meme coin market. I still imagine there's quite a lot of money there, but there was a massive misallocation of capital back in December, January 2025 timeframe. A lot of those meme coins now are down like 80 to 90%. And ultimately that's part of the healing process for the Cryptoverse, part of the healing process to go through that. And I also wonder sometimes, when you see the social interest start to climb, and then it seems like there's a chance that it could just continue to go up, but it seems to just die out anytime it gets up to the 0.4 to 0.5 wristband. And I think part of that is due to the fact that when social interest does start to go back up, the main stuff that gets promoted and shilled is all that really frothy stuff, right? Like all the meme coins and stuff. There'll be influencers that launch their own meme coins, presidents that launch their own meme coins, and then people get rugged, And so the people that maybe were interested in crypto back in 2021 and or 2017, that type of personality that's more likely to join at tops rather than bottoms, they come back to crypto, and they just kind of find it in almost, at least the altcoin market. I'm not referring to Bitcoin, right? They find the altcoin market essentially in a worse state than what they left it back in 2021 or 2022, because now there's not even any pretending, right? There hasn't even been pretending going on in the altcoin market. A lot of it has just been, the frothiest stuff gets promoted the most, and any team actually working on anything somewhat relevant is just often ignored. So I think that's been a big part of it, and I don't really necessarily blame, the Cryptoverse for a lot of this stuff. I mean, I do think that it's easy to point fingers and say things like, well, had crypto focused on this, then this wouldn't have happened, right? If people had focused on this. But you could argue that the reason that, that stuff wasn't focused on as much this cycle was because of all the regulation risk back in 2023 and 2024. I think it made it so a lot of people didn't really want to take on the risk of developing too much in the Cryptoverse because they didn't really know what they were developing products around. Like, were they securities? Were they not? And I also don't even think it's the reality that even they could have been securities. It's just that we needed regulatory clarity. And it's kind of like when we talk about, all the tariff discussion, right? I mean, I don't really think tariffs are a good thing, but the one thing worse than tariffs, in my opinion, is constantly changing what the tariffs are and sort of flip-flopping. That's more difficult for markets because markets just hate uncertainty. If you just sort of set a tariff at a certain level and just say this is what it's going to be, it's still probably not that great for the overall economy. It leads to sort of less globalization and more isolationism. But at least businesses can adapt. If you change it from 25% to 50%, back to 25%, how do businesses operate under conditions like that? And that's what leads to this uncertainty in the markets. And that's probably one of the reasons why we saw markets sell off back between, say, February OPEX and March OPEX, which is what one of the things we talked about. So when we think about, the social risk, and maybe I should have mentioned this earlier, it's essentially just a number between 0 and 1. And it's made up of 5 different metrics, okay? It's made up of subscribers to YouTube channels, views to those YouTube channels, followers to analysts on Twitter that talk about crypto or X, exchanges on X, and then layer 1s on X. So you can kind of see they all basically follow the same pattern, but what we did was we just decided, all right, we'll take all 5 of them, and we'll calculate the average. Now, if you think that something should not be included in that, and you're here on the Into the Cryptoverse website, and let's just say you don't want to include exchanges in this metric because there are marketing campaigns that exchanges run sometimes, and it'll lead to these like major boosts in follower count that's completely not organic. It's completely unorganic. And so you could argue that sometimes it might make sense to reduce the weight on some of the metrics or completely take it out all the way. And that's sort of the beauty of it, and sort of the risk stuff is that it's not like there's a right way to calculate it. I mean, one of the biggest criticisms I get this cycle about the social risk is why I should be looking at Instagram and I should be looking at TikTok. And while that may be true, I also think that these 5 metrics do just fine. I mean, I still don't think, if that stuff really mattered, if there was really something that we were missing over on TikTok or Instagram that was changing the sort of the market dynamics, then why does it feel like no one's interested in crypto? And furthermore, if I really did miss out on following, influencers on those platforms, why, and if retail truly did come back, why did Bitcoin dominance never go down? So I think it's an easy thing to say. Well, you're just missing the retail on other platforms. But I also think that the truth is in the charts, and Bitcoin dominance never really got that big drop. And you could argue it's because, well, retail never came back. Now, I'm not going to argue that there's no sort of lagged effects, right? I mean, prices going up leads to retail investors coming back. But at least in hindsight, when you look at this chart, you can understand why alt season never occurred, is because retail, whenever they did come back, they left. And who can blame them, right? Who can blame them? They come back, they get shilled some meme coin that then goes to zero the next week, and then the person that shilled it to them has just moved on to another meme coin that they're shilling. So it's kind of like, the Cryptoverse is going, I think, through sort of a healing process right now. And I think they need to find, the Cryptoverse collectively needs to figure out what's important. But I also think this is something that's happened in markets ever since markets existed. Markets mature. Eventually we lose our way. Investors lose their way. They focus on what doesn't really matter. And then, we get a course correction. And that's a pretty normal thing. So the other thing I wanted to mention is, there's plenty of charts that you can look at. We can look at individual charts, right? One of the ones I like to show a lot of times is the YouTube views, because, if we look at that, this is what it looks like, right? Where you basically have a lot of different views. Let me actually pull it back up over here. But you have a lot of different people, watching these different YouTube channels, and so we just go down to the social media charts. We also have other ones too, like Twitter followers and all the other stuff. But here we are, YouTube views. So when we look at this is made up of, I don't know, like 20-something, maybe YouTube channels, working at a 7-day moving average. Right now, the 7-day SMA of views on these channels is approximately 900,000 views, 896,000.79K to be exact. And when I look at it, I try to think like, well, has there been a time this cycle where we truly saw retail return in the same way as last cycle? And it's not. I mean, back at the heights of 2021, we essentially had 3 to 4 million viewers per day collectively on these channels. This cycle, anytime we go above 2 million or get close to it, it's just a pullback. And back then, we saw the markets stay at these elevated levels for weeks before coming down. This cycle, anytime we get close to 2 million, that's it. Now you might say, well, hold on a second, Ben. What about this recent spike? What's going on there? This is not actually an artifact of what actually happened in the markets. This is an artifact of YouTube just not updating the statistics for like a week or something. And so then what happened is it basically looks like there was no views for a week or so, and now, after it looks, there's like basically no viewers for like a week or two or so. And then all of a sudden it came back, right? The statistics came back, and then it looks like, oh, everyone's all of a sudden interested again. In reality, it's probably better to sort of smooth that out, right? It'd probably be better to smooth that out. But we haven't done that yet. We might do that. You can kind of see, though, that there was the interest in YouTube views, right? Like the 7-day SMA of it has generally been going down since the new administration took office. If you just kind of ignore that, if we take this right here and sort of average it out with the data that occurred before it, you can kind of see it's, retail interest has been slowly waning in the first quarter of the year. It's not completely unheard of. We actually also saw interest in the Cryptoverse go down. Maybe not. Maybe not. I shouldn't say it like that, but we saw prices go down back in parts of Q1 of 2017. The main difference between 2025 so far and 2017 is that in 2017 we were risk on in February, whereas we've been risk off in February of 2025. Therefore, the March low was actually a lower low compared to January, whereas in 2017, the March low was a higher low compared to January. And the last thing that I want to mention is if you go over to the workbench and you look at some of this stuff, right? If you look at the social risk and we add that to the chart, and then we add on here something like Bitcoin dominance without stablecoins, what you'll see is that as long as social interest remains low, as long as it's going down or remains low, Bitcoin dominance doesn't crash, right? So, you need retail here to make Bitcoin dominance crash. And the reason, it makes sense. There's millions and millions of altcoins. There's only one Bitcoin. And this during these times of the cycle is what tends to turn a lot of people into Bitcoin maxis. But you see Bitcoin dominance go up when social interest goes away. Because there's only one Bitcoin, there's millions and millions of dollars. There's a lot of arguments you'll see during mania phases where people will say stuff like, oh, well, Bitcoin dominance, they think that Bitcoin dominance will go down forever simply because there's more altcoins being created. Just because you create something else, like just because you create more altcoins doesn't mean more money's coming into the cryptoverse. Basically what happens is that the money that's in the cryptoverse allocated to the altcoin market just gets diluted from any individual altcoin. So that's the reason why Bitcoin dominance put in a higher low in 2021 and 2022 compared to 2018. Because even with all the money printing, Bitcoin dominance still did not go to a lower low. So again, these charts show you, why the market is so much different than what we saw back in 2021 and 2017, at least so far. Now, monetary policy could theoretically change at some point. But that hasn't happened yet. We have seen some sort of softer changes, right? We saw quantitative tightening slow, but quantitative tightening also slowed back in May of 2024. And shortly after they slowed QT in May of 2024, we also saw Bitcoin get a nice little rally for a few weeks as well. So I think that the social risk by itself is maybe not like the only indicator to use. But if you are someone who values their portfolio in Satoshis and you find things like Bitcoin dominance important, and you truly want to understand what creates the sort of the market conditions for something like alt season, then I do think following monetary policy, I think following social interest in the cryptoverse makes a lot of sense. But anyways, guys, we're going to wrap it up there. Let me know if the audio in this video sounds any better. If it is, and I'll keep it the way it is. If it's too loud, let me know that too. And if it's too soft, let me know that as well. I think it's a little bit better, but I'd like to hear what you have to say. And hopefully the video is small enough today where it's not covering up half the screen. Anyways, guys, we're going to wrap it up there. Make sure you subscribe, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.